The markets have been crashing all week, but crashes are often where the biggest opportunities appear. What if I told you there are stocks trading at very low valuations compared to their potential, and they have upcoming catalysts? In this video, I'm going to talk about 5 stocks that should be on every watch list. One of the stocks on this list even has Wallstreet analyst price targets as high as, although of course price targets are never guarantees. Now we've got a lot to get through in this video, so I'll keep this intro short, but if you find any value in this analysis, all I ask is that you smash the like button. It literally costs nothing, but it helps the channel out so much. I'm aiming for 500 likes on this video. Help me hit that goal. I want to point out, I'm not a financial advisor. This is not financial advice, so always do your own due diligence. And I would really appreciate it if you could try to answer the question later in this video. Now let's get straight into it. Stock number 1. This is one of the smallest stocks on the list, Intelligent Protection Management, ticker symbol IPM. Intelligent Protection Management is a technology solutions provider focused on cybersecurity and cloud infrastructure. They provide dedicated server hosting, cloud hosting, data storage, managed security, and other related services, including consulting and implementing technology solutions for enterprise and commercial clients. Across the US, some of these clients are major companies such as Nvidia, Dell, and Microsoft. Looking at the investor's presentation, IPM has over 20 years history of technology innovation and holds several patents. They provide tailored IT solutions serving customers ranging from small businesses to large enterprises. Intelligent Protection Management is rated by one Wall Street analyst who has given this stock a buy rating and a price target of $650. Which represents 230% upside from today's price. They recently announced an extension of a license agreement with an industry-leading data center provider until 2032, reinforcing a long-standing strategic relationship. Supports IPM's continued focus on scaling a secure, highly reliable digital infrastructure. The company will also be releasing their earnings report next week on March 17th. And they just announced that CEO Jason Katz will participate in the 38th annual Roth conference on March 22nd to 24th. IPM stock has been doing very well recently. It's up 16% this week as trading volume has started to increase. This is a tiny float stock trading at just $2 and a market cap of only 25 million. The next stock on the list is a special one. Today it's a penny stock, but just 18 months ago, Wall Street had huge expectations for this company. Dragonfly Energy Corp. This stock is on the up, gaining 20% in the past 5 days and 35% in the past month. However, the stock had reached as high as $26 back in October. Dragonfly Energy, ticker symbol DFLI on Nasdaq, is a lithium battery technology company specializing in cell manufacturing, battery pack assembly, and full system integration. Through its Battle-Born Batteries brand, Dragonfly has established itself as a frontrunner in the lithium battery industry with hundreds of thousands of reliable battery packs deployed in the field through top-tier OEMs and a diverse retail customer base. Their patented dry electrode manufacturing process can deliver power solutions for a broad range of applications, including energy storage systems, electric vehicles, and consumer electronics. The company's mission is the future deployment of its solid-state battery cells. Now, straight away, this stock reminds me of one of my favorite penny stocks of 2025. If you were following my channel early last year, you would have seen me talk about Amprius Technologies a whole bunch of times when that stock was trading between $2 and $3. Today, Amprius stock is nearly $18 after hitting a new all-time high this week. But now in 2026, it's a very exciting time for Dragonfly. In January, they launched the Battlestar solar panels, and in February, Dragonfly Energy won dual honors at the 2026 SEAL Business Sustainability Awards for Breakthrough Trucking Power Solution. Looking at the investor's presentation, Dragonfly have a patent portfolio of over 90 patents around the world. They have several original equipment manufacturer and industrial customers, giving them significant growth opportunities across key sectors such as heavy-duty trucking and industrial power markets, oil and gas, solar integration, and utilities. In terms of their financials, massive improvements. They've restructured their debt, realigned resources towards near-term revenue generating opportunities. So we can see here they are growing their revenue quarter after quarter, and as it says here, they expect that to continue. So March 16 will be a big date. That's when they release their next earnings report. But one of the biggest catalysts that investors are waiting on is the collaboration with PACCAR announced in October, which could lead to the potential commercial integration of Dragonfly's batteries in PACCAR vehicles. Although DFLI stock is trading around $3, there is a Wall Street consensus price target of $17.50, which represents 485% upside from the current price. Now the lowest target here is $15, but if we look back just a little bit, Wall Street was very bullish on this stock going back 18 months ago, with Roth MKM and Stifel rating this stock as high as $108 and $135. Considering that today's price is only $3, there is opportunities here, and a market cap of only 36 million with increased trading volume recently. For my third stock, I have picked Ring Energy, ticker symbol REI. The stock is trading at just $300 million and has been on a good run so far this year, up over 60% year to date. Ring Energy is an American independent oil and natural gas company focused on exploration and production in the Permian Basin. They acquire, develop and produce oil and natural gas assets, primarily targeting liquid-rich formations in West Texas, one of the most productive oil regions in North America. Ring operates hundreds of producing wells and holds significant acreage across the Permian Basin, positioning the company to benefit from continued oil demand and development opportunities in one of the most important energy regions in the United States. I discovered this company when I was using a scanner on Seeking Alpha, and straight away my attention was drawn to the fact that they have a forward EPS of 19 cents and a forward PE ratio of only 7.95. But there is also a lot of very bullish articles on here rating this stock very highly. But what did the professional analysts think of Ring Energy? There are two Wall Street analysts covering this stock with a price target of $2.50, which is 70% upside from the current price. The company has been doing very well over the past year, but their share price has performed in line with historical crude oil prices. Should we see oil continue upwards, then Ring Energy looks like a bargain in my opinion. But what do you think? The next stock on the list is Pulsar Helium Inc. Pulsar Helium is an emerging multi-project helium exploration and development company with first-mover advantages in two helium provinces, Minnesota, USA, and Greenland. Now you might be wondering, why am I talking about helium? And there are many reasons. But as of today, helium prices have started to soar as Qatar have halted production, and this has put huge pressure on global prices. Think of oil over the past few weeks, except helium is in far shorter supply and used in almost every technology industry. Looking at the investor's presentation, we can see that the stock is listed on London's AIM, Canada's TSX, and the OTC. In the US, ticker symbol PSRHF. There is a huge market opportunity as helium demand is expected to double by 2035, and so far, supply has struggled to keep up, leading to frequent shortages, which of course puts huge pressure on price. Helium is used across several high-tech industries, such as rocket fueling and spaceflight, chip manufacturing, advanced energy, electronics, and quantum technology. There has been such a supply-demand imbalance with helium that the US Department of Energy and NASA have begun funding a company with intentions to mine the moon for helium, while Pulsar is perfectly located in Minnesota. And the company have plenty of upcoming catalysts in the first half of this year. PLSR stock is analyzed by 5 Wall Street analysts, who have an average price target of $81 Canadian. This is based on 5 analysts, not one, 5 separate analysts. The low forecast is 69 with a high forecast of 94. So considering that today's stock trades at just about $2, I want to hear your thoughts in the comments. Let me know if you think that these targets are realistic. After all, The market cap of this company is only about $327 million, and trading volume is quite strong considering that this is not on the Nasdaq or the NYSE. So as usual, when I do these videos, I like to include at least one high potential biotech or pharmaceutical company that has upcoming catalysts. So stock number 5 is Gain Therapeutics. This is a clinical stage biopharmaceutical company focused on precision therapeutics and neurodegenerative and rare diseases. Gain is trading on Nasdaq, ticker symbol GANX. The company leverages its proprietary Magellan TM. This Magellan TM discovery platform integrates AI-supported structural biology, proprietary algorithms, and supercomputer-powered physics-based models to generate first-in-class or best-in-class product candidates. We can see their pipeline here, where they are at various stages of clinical development for several indications, but their lead candidate, GT2287, is what has grabbed the attention recently. This is a potential disease-modifying treatment of Parkinson's disease and has applications in other neurodegenerative diseases including Gaucher disease, dementia, Lewy bodies, and Alzheimer's. But this company has a huge catalyst coming very soon. Looking at the investor's presentation, we can see that there is a huge billion-dollar market for Parkinson's, and their GT2287 demonstrates statistically significant biomarker evidence of disease-modifying effects. In terms of their financials, they have $8.8 million in cash, which gives them cash runway until the end of 2026, while they have no outstanding debt. On March 12th, Gain announced that they will present Phase 1B interim data for GT2287 at ADPD 2026 on March 18th, and a poster session from March 17 to 21 in Copenhagen, Denmark. The company will present data demonstrating CNS target engagement, pathway biomarker effects, and early clinical improvement signals. And Gain submitted an IND response to the US FDA in March 2026 and expects a reply in the coming weeks, while they maintain on track to start a Phase 2 trial in Q3 this year. There is 4 Wall Street analysts covering this stock with targets ranging from $5 up to $10. The average target of $7.50 represents 107% upside from today's price of $2.50. And we can see here that the company has a very small float and a market cap of only $97 million. There is a lot of investors following this stock and loads of data posted on Reddit, StockTwits, and X. So I expect to see movements when March 17th comes around. But what do you think? The real question is, which of these 5 penny stocks would you buy and which ones would you avoid? Intelligent Protection Management, Dragonfly Energy, Pulsar Helium, Ring Energy, or Gain Therapeutics? Which of these 5 penny stocks is your favorite? Let me know in the comments. And if you enjoy discovering undervalued stocks before the crowd, make sure to like and subscribe because I post new analysis every week. And if there is any stocks that you think I should be looking at right now, then drop the ticker into the comments and I'll take a look. If I like it too, then I might feature it in an upcoming video very soon. But I'm not a financial advisor and this is not financial advice, so always do your own due diligence. I hope you have a great weekend and I'll catch you in the next one.